now. Thank you.
Good afternoon, everyone. So the Governance and Audit Committee meeting of Wednesday, the 8th of March. Can I say a warm welcome to everyone that's come into the Guildhall today. It's nice to see faces around the table, and a warm welcome as well to those that are online. Hopefully you're not too much of a snowed in position for you all. I see a lot of snow on Julie's back screen there. So if you can start the meeting with the agenda item number 1, which is apologies for absence.
Apologies from Councillor Kelly Roberts and from Gordon Anderson.
Thank you. Can I ask if there are any disclosures of interest, please? Mike?
Yes.
Sorry.
Yeah.
Too many mics.
Members of the Port Authority, agenda item 5 is in the draft statement of accounts report.
Thank you.
Similar.
Okay, thank you. Any others around the table? Any on screen? Not seeing any. Okay, thank you both. If we can take the minutes of the meeting of the 8th of February next, page by page for accuracy, and then I'll ask for some hands for approval. Page 1, page 2, page 3, page 4, page 5, page 6, page 7, page 8, page 9, and that's it. Is everyone happy they're an accurate reflection of the meeting of that day? And if so, can I have some hands up, please? I've got all hands up around the table, and I can see hands up on screen as well. Okay, so they're an accurate reflection. Thank you, Jeremy. The next item on the agenda is the Audit Wales Audit of Accounts report draft. Gillian, can I invite you to present this? And I understand you're going to take your other agenda items following Jeff's presentation of the accounts.
Is our Audit of Accounts report, our ISA 260 report, which just summarises the main findings from our audit of your 2021-22 financial statements. This is still in draft and it will be updated to a final version for Council on the 30th of March. I can just take you then to the contents page on page 13. You would have seen that we intend to issue an unqualified opinion on your accounts this year. Before you approve the accounts for Council, there are some issues I just want to draw to your attention. So if we go to paragraph 4 on page 14, we set out the level of materiality we work to in auditing your accounts. As auditors will have told you before, auditors can never give complete assurance the accounts are correctly stated, so we work to a level of error to identify and correct misstatements that might otherwise mislead the user of the accounts. So for this year's audit, we set the level at 10.37 million. And we also set lower levels for areas that may be of more importance or interest to users, which are things like senior officers' remuneration. We set the limit at £1,000, and related party transactions, where we set our materiality at £10,000. So when we drafted this work, some of our audit work was still outstanding, and that's detailed in paragraph 6. Since then, we have completed our testing of the lessor disclosure note, but we still have our final review of the audit file to do and reviewing the revised financial statements. But this work will be completed before the accounts go to Council on the 30th of March. So if we move on to paragraph 9, which sets out technical issue on infrastructure assets, which has affected all local authorities this year. As with previous reported years, reporting practices meant that there isn't sufficient information to be able to accurately measure the gross costs and accumulated depreciation of infrastructure assets. And the Council has taken advantage then of a temporary relief to only disclose the net book value of infrastructure assets that was allowed under an update to the Code and Welsh Government regulations. I just want to stress that's applicable to all councils in Wales and also a significant number in England and Scotland as well. So it's nothing that's particular to the Council, it is a national issue. So if we move on to paragraph 12 and exhibit 1, I'd just like to note that we received the draft accounts on the 16th of November, which is later than the flexibilities allowed by Welsh Government, and we expect your audit report to be signed on the 31st of March following your council meeting. As I've said, the Auditor General intends to issue an unqualified opinion on your statements of accounts after we've received the letter of rep, and the proposed audit report is set out in Appendix 2 on page 20. And in terms of any significant issues arising from the audit that we need to bring to your attention, if I draw your attention to paragraphs 16 to 18 on page 15, there were 3 uncorrected misstatements in the accounts, which are not material to our opinion. They are above our trivial level, so we need to bring these to your attention. So firstly, the council has undertaken a review in 2021-22 to quantify and correct the misstatement between the revaluation reserve and capital adjustment account that led to the qualification of the accounts in 2021. But until all the affected assets have been revalued, the misstatement won't be fully corrected. But the work that has been done in 21-22 has assured us that the remaining misstatement is not material. And the second issue is the debtor with the Welsh Government in respect of national domestic rates income due to the council was overstated by 3.9 million. And finally, a payment made in April 22 for services to be provided in the 22-23 financial year was recorded as a payment in advance, which overstated both the debtors and creditors balance by 787,000. So as said, these are not material to our opinion, but we need to draw them to your attention. There are also some misstatements in the accounts that have been corrected and have no impact on the council's net position, and these are summarised in Appendix 3 on page 25. And finally then on Appendix 1 on page 17, it just sets out the letter of representation that the Auditor General requires from the council before he can issue his opinion. And if anyone's got any questions, I'd be happy to take them. Thank you, Chair.
Sorry, Chair, I'm not sure if anyone's speaking in the chamber, but it's muted.
Yeah, this is a problem that's happening all the time now.
I did think it was just me for a minute then, Jeff.
No, it's
Jeremy did say they were having issues this morning, didn't he?
yeah, they've had them for the last few weeks. You know, people in the chamber have been speaking and can hear us, but we can't hear them. So
Can you hear me now?
yes,
Yes.
Great.
Yes.
He was press the right button somewhere.
Someone has pressed mute door, that's what's caused the problem.
All right.
Someone online.
Okay. Phil Sharman.
Chair, thank you very much. Look, I realise these 2 next items, the item 4, item 5, are a big piece of the business of this meeting. And Chair, I hope you'll just grant me a moment to just go over a few things, and I maybe not be quite as quick as I normally am with these things, but they'll take a bit of time.
Can you just, Phil, can you just pick up any queries for Gillian on this instance with agenda item 4, please?
So on item 4 then, I think first of all I'd just like to remind the committee that the purpose of, well, one of the purposes of having the co-opted members on the committee is to bring some expertise to the committee's membership. Particularly in items like this where we've got the financial statements and the auditor's report. And certainly this is an area where I hope that I can contribute to the business of the committee and assist members with dealing with these items. That's the first thing. Chair, the second thing is I'd just like to draw attention to our terms of reference. And in the terms of reference, we've got a specific duty on financial reporting. KK is to review the annual statement of accounts, and LL is to consider the external auditor's report. And we do have those two items scheduled for business today. So these are absolutely fair and square within our remit. So if I just confine my comments at the moment to the auditor's report, which is the item that we're obliged to consider under LL, then I'll do that with Gillian. And the first thing which I'd just like to ask is whether the delay in the publication of the financial statements beyond the statutory deadlines will have any kind of sanction upon the council. I mean, we do understand, and we've been briefed on the background to this, unpicking those reserves and getting them restated as a consequence of last year's qualified opinion. So we understand the context here. But the fact the statutory deadline has not been met, I'd be interested to know whether there's any sanction, either locally or nationally, and whether there's any obligation upon the auditor to report specifically on that matter, the breach of the statutory timetable.
Thank you, Phil. It's okay if I answer that? Yeah. No, there isn't any sanction. The Welsh Government does allow flexibilities. You had to publish on your website that you were relying on those, and that the accounts will be later than the statutory deadline at the end of July. There are no sanctions though, and we fully understand the reasons why things are late this year. So there isn't anything other than reporting to yourselves that we'd be taking action on. Okay,
thank you for that. Chair, there's just one other item then in respect to the auditor's reports. I note the unadjusted misstatements that Gillian has mentioned there, and also the ones which the council has adjusted for already, and you've highlighted those, Gillian, in your reports. So are you satisfied now that those items that you do require adjustment have been made? And in doing that, so in asking that question, I know that one of the things you picked up, for example, was the need to name those officers earning more than 150,000 a year. And when I looked at the draft accounts that we'll come to in a moment, I saw that some of those things which you have, if you like, expected to be adjusted for are still at the moment pending adjustment. So that's just an aspect I want to be clear on. So just to clarify, all those expected adjustments have been made, and those that have not been adjusted, which are showing as unadjusted, you're satisfied that those are below the level of materiality?
The accounts that you've got next on the agenda are the draft statement of accounts. Subsequent to then, the amendments have been made that we're required, so the versions that will go into council will include all the adjustments we expect to see. The 3 unadjusted misstatements you refer to, as I said, they're less than material, so we're satisfied that they haven't been adjusted, but it won't affect our opinion because they're not material to our opinion. But they are above our trivial level, so we do need to bring them to your attention.
Okay. So, Chair, in that case, I think certainly from my point of view, we've received the auditor's report. It's a pretty clean report, as we've noted, resulting, thankfully, in an unqualified opinion this time. So that's something that we can take direct assurance from when we're considering the accounts in the next item.
Thank you, Phil. Thank you, Gillian, for confirming those responses to Phil. I think it's been a difficult year with producing the accounts, and particularly in the auditing the accounts, because Audit Wales have had difficulty in completing that work as well because of their resource. But it's good to see that it's been done now, and hopefully we'll be back on track. Jeff, did you want to comment anything?
Thanks, Chair. Just wanted to make a statement on behalf of the Director of Finance, who sends his apologies to this meeting, send our thanks to our Audit Wales colleagues and all the colleagues on the ground who, well, when I say on the ground virtually, I should say, who conducted the audit, and their flexibility and commitment to and working with us in delivering the financial statements, albeit with a delayed timetable, but their endeavours are appreciated, and look forward to working with them again going forward.
Thank you very much. If there are no more questions on agenda item 4, then if we can, that report was for noting in this instance. So if we can now move on then to the big agenda item on this afternoon, and that's over to Jeff Dong, and that's the draft statement of accounts for 21-22. If you can take them through, and I'm sure there'll be some questions then, but if you can explain as best as you can, that we can all understand.
Thanks, Chair. As I say, as previously explained to most of the members of committee who were in attendance earlier on at the training session which preceded this meeting, I'm here in the stead of the Director of Finance, Ben Smith. I'm Jeff Dong, the Deputy Chief Finance Officer, the Deputy Section 151 Officer, and I'm here to deliver the financial statements for 21-22 to the best of my ability to the Audit Committee. Just want to put a couple of caveats out there that I'll endeavour to answer your questions to the fullest of my ability. However, I do reserve the right to offer a written question if I don't have the technical competence to provide an answer at this meeting. First of all, I'd like to place on record my thanks to my colleagues in the Accountancy Department, led by Amanda Thomas, who's responsible for delivering this document, albeit a slightly delayed time frame. You know, as you can see before you, it's a huge, complex document, over 200 odd pages. And again, I forgive committee members who were at training earlier on who may have heard this before, but for the benefit of other attendees on the meeting, just to put it into a bit of context, this document a number of years ago would have been twice the length, because it also contained the financial statements for the pension fund as well. So there is an agenda by SIPFA to simplify these financial statements for local authorities, but it's slow and swift, and we're working with it's a slow process, not swift. For example, in the last couple of years, we've removed a couple of superfluous disclosure notes within the agreement of our external auditors. So we are trying to make them more readable for the common man, non-technical experts that Mr. Sharman referred to earlier on. However, it's a slow process. We are governed by a code of practice and a code of disclosure in what is required to be in this document and how it's disclosed. It contains a whole raft of information, the key items of which I'll go through with you. However, we are required to slice and dice that information in various ways and disclosing the same information, including some things, not including other things. So hence, you know, it is quite an unwieldy document. So if I could ask members then to turn to the statement of accounts itself, then, as you can see on page 2 is a full list of contents, and I have no intention of going through that list of contents on a line-by-line basis, but I will move to certain elements in the document which I think merits your attention. Most importantly, I'll draw your attention to the group income and expenditure statement and the group balance sheet, and some of the numbers contained therein will spawn other additional disclosures from myself and require explanation. I shall also address the remedial action undertaken by this authority and the impact it's had on the financial statements as a result of the audit qualification last year, and the impact it's had and the remedial action that we've taken on the accounts this year, and which contributed in part to the delay in the finalisation of the financial statements. As I said in the training which preceded this item, you can see on page 5 what a huge complex organisation Swansea Council is. That's the full list of services. Even that's not comprehensive in terms of the list of services that we deliver. You know, it's got things like landlord services, but it doesn't actually say that we are now actually a house builder, for example, and you know, we're a property developer as well. That's not included there. So that list of services indicates to you the full range of services that we're responsible for, and how those are needed to be translated into the financial statements. Some of them have different requirements and treatments, and need to be accorded the consideration that asset class or service determines. So it is complex, and sort of part explains the length and complexity of the document before you. Also, you know, lots of members around this committee are members of the executive or members of scrutiny panels who are used to receiving budget monitoring reports on a regular basis, updating you on the financial performance of the council. Those will look very different to the statements before you now. Those are management accounts. Those are budget monitoring accounts brought before you so you can enable corporate action to remediate any variances or take any action that you see fit as a result of variances in the financial performance of the authority. These accounts are compiled in accordance with statute and in accordance with proper accounting practice and the code as outlined by SIPFA. So as I previously said, we're required to present the information in a format and add in and take out various other elements which my predecessors have referred to as funny money entries, whereby they distort the figures that you would naturally see for in budget monitoring purposes. As we've seen in the previous item, you'll have the assurance and comfort that Audit Wales have been through this document with a fine-tooth comb. They've said they can't give complete assurance. However, you know, that there is the comfort that they are happy that they present a true and fair view and are able to offer an unqualified opinion on these accounts. On page 11 is a quick snapshot of the spend with the council, where we get our money from, what we spend it on, and the services it provides. And here, this is in relation to the observation made by our external auditor, Gillian, and an observation made by our lay member, Mr. Sharman, that this is in draft form, and there are going to be some errors and omissions in this draft form. And those eagle-eyed amongst you will have spotted an error and omission on that page already. I can assure you that council tax is not zero for 21-22, as you can see on that page there. That is a function of the spreadsheet which is used to compile this document, not pulling through the correct figure. So in the final version that shall go to council on the 30th of March, I can assure you that our council tax income shall be truly reflected. For your information, the council tax emitted in that figure there should be 137 million, which brings the total spend of the authority up to about 936 million. So as I said in the training, that, you know, with turnover nudging $1 billion, that makes us a large organisation. The continuation of the narrative report there on page 12 outlines, the budget outturn position that members will be familiar with when they receive budget outturn, and a reported a budget surplus position of 40 odd million in the year, which, as you see later on in the report, is recommended to be transferred to reserves. On page 14, we have a summary then of our capital spend. As you know, this council has quite an aspirational capital programme. In 2020-21, reported probably the largest capital programmes in its history. In 21-22, not far behind, capital programme of about 145 million. And you can see the assets, the capital assets that capital programme has delivered below. And as you can see there, finally sitting on the balance sheet with the final portion in the year there of the arena there at the bottom of page 14, and countless other high profile capital projects, schools, the new council houses that have been built during the period, and also our routine capital spend in carriages and footways, highways, etc., disabled facilities grants. You'll see those items year in, year out basis. Next, if I could ask members to turn to the comprehensive income and expenditure statement on page 24. And this is, comparable to a private company's P&L statement, the profit and loss statement, or in our case, it's the INE, the income and expenditure statement, and which highlights, again, in accordance with what's required by code, the main headings and items of expenditure and income across the authority during the year. Again, restated for last year, that you can see some comparators with. Suffice to say, I will go into a bit more detail later on about certain items on the INE and the balance sheet. There's always interest in the movement in reserves, and that starts on page 28, which has a disclosure of the movement of reserves, and as has been communicated to you by the Director of Finance, and is always a cause for debate. On the balance sheet on page 32, and they start on page 32, and on page 33, basically. You can see outlined at the bottom of that page the reserves, our usable and unusable reserves, and wants to highlight the difference between the two. The unusual reserves are at the bottom. These are technical reserves. They're not cash backed. They are purely a function of local authority accounting. Obviously, you're aware of double entry bookkeeping, and to eliminate the impact on the INE account of the authority, the other half of the entry needs to be put somewhere to balance. And so these notional reserves have been created over time to negate the effect on the INE. They're a construct of public sector accounting, and they're all there at the bottom of page 33. So the revaluation reserve and the capital adjustment account, and those two reserves were the subject of the Audit Wales qualification last year, and I'll go into some detail later on about the remedial action that's taken to get those into a position where Audit are satisfied this year. The pensions reserve, and this is in relation to offset the long-term liabilities of the council as an employer in the local government pension schemes and the liabilities arising therein. And then the financial instruments adjustment account is again another accounting reserve which is used to amortize the impact and effects of financial instruments over the course of their lifetime, variable rate financial instruments over the course of their lifetime. Ones of more debate to elected members are the usual reserves up above, and in that note which I previously referred to, you can see movements in those reserves, and they have been and are always, especially Councillor Paxton Hood-Williams is always very interested in reserves, I note, and always asks very pertinent questions about the movements in those reserves. So that note there gives some outline the transfers in, transfers out of reserves during the year. As I say, the revenue surplus at the end of 21-22 of 41 million was transferred to reserves in full. Now we're on the balance sheet. If I've got your attention on the balance sheet, there are, as you may recall from the training that we had this morning, perhaps I'd like to draw your attention to, and some of the training highlighted this morning to elected members was to look out for large movements in numbers from year to year and large swings, etc. So if we have a look at, say for example, our short-term investments, for example, it's gone up from 54 million to 191 million in 1 year, halfway down page 32. And then equally over the page, we can see our long-term borrowing going up from 565 million to 689 million. There's a direct corollary to those two numbers and why they've shifted by almost equal amounts. As has been constantly reported to elected members, there was and is a material capital programme to finance. The Director of Finance has been clear in his communication, both to the Executive and Council at large, about his strategy to finance that capital programme, and it was during periods of expensive borrowing to defer externalising that debt, and to internalise that borrowing, use our internal resources to tide us over in the short term. But when the opportunity arose to externalise the borrowing, he would go out into the market and do so. And those two figures are in the enactment of that and materialisation of that action, in that the Director of Finance, Ben, and as reported to you, went out to the market in 21-22 and undertook 120 million pounds of PWB borrowing at record low levels, at average of I think it's about 1.94%. It's the lowest borrowing that this council has ever achieved, and is probably ever likely to achieve, noting that PWB rates are now currently at 4.75, 4.95. So that is the manifestation of that borrowing, and Ben has reported that to council and cabinet throughout. So that money is being borrowed, sits on the balance sheet, but it's not needed immediately because the capital programme that is used to fund is still being delivered and is in the process of being delivered. So what do we do with it? We invest it. So that money goes out then and is put on deposit and earns a rate of return. It's council's money, and it's needed for core purposes. So it's managed in accordance with our treasury management policy, which is a very low risk policy. In terms of where we place that money, we just place it in term deposits with counterparties who are highly credit rated for very short duration, which we'll go on to later on, and we'll show some of that activity and how that's benefited us in this financial year in terms of providing us financial resilience in this economic climate. Further to which, on page 36, then we do move to the cash flow statement, and again, further to the training that you see this morning, look out for big numbers. And I suppose, two of the biggest numbers that you can see on that page, and probably in the whole document, are the purchase of short-term and long-term investments, 1.5 billion, and proceeds from short-term and long-term investments, 1.4 billion. Suffice to say, this isn't a reflection. We don't have a 1.4 billion pounds of investments, and we haven't sold 1.4 billion pounds of investment. This is a cash flow statement. It's showing the turnover of that cash and how that cash is running through the authority. So in the management of those investments that I previously referred to on the balance sheet, our treasury management team place those deposits on deposit with counterparties, and then when they mature, we receive it back in. And that's the manifestation of that activity. Money in, money out, money in, money out. And it's that cash flow and that active management of that cash flow which has stood us in good stead to be able to assist local partners, for example, you know, in the prior year in building the Bay Hospital, field hospital. It was because we had such positive cash balances and had good treasury management, good cash flow management, that we could, before being reimbursed by Welsh Government or the local health board, use our balances internally to assist locally in delivery of the pandemic programme. Similarly, whereby there was a mismatch between us receiving grant in terms of COVID assistance to the local communities, we were able to discharge those grants very quickly in advance of receiving that grant payment because of the robust balances that we hold in reserve and the active treasury management function that we retain in the council. On page 75, again, it's a more detailed disclosure note. Again, I don't want to single you out, Councillor Paxton Hood-Williams, but then it's again, it's a movement and earmark of reserves for you, giving you the detail of all the reserves at our disposal. These are cash backed. They're policy decisions to be taken by the executive and council upon the advice of the Section 151 officer, and very sensibly, Cabinet and council always takes Ben's advice on what to retain within these reserves. An interesting one there to bring to your attention is one halfway down that page is your insurance reserve, which is an important reserve that we maintain. Just to give you by way of background, we do, and we're legally required to have insurance policies both for property and asset cover and third-party liability cover and employer liability cover, professional indemnity, marine policy cover, because we are a riparian authority. But to mitigate the costs of having external insurance, we do retain an internal insurance fund, which is ostensibly you could equate it to your own excess levels for your own domestic insurance policy. As you're aware, if in your own domestic situation, if you have a policy with a high excess, you pay less premium. Similarly, this insurance reserve that we have here can be viewed as our excess before we cut into our policy. So we have a stochastic review of this to identify the optimum level of reserves or excess to maintain, and we're advised by actuarial advisors based on our previous claims experience, projected losses, any emerging items or emerging risks on the landscape to identify an appropriate reserving level for insurance. But you know, it's you know, I've made it sound like a science, but you know, it's about reserving for the unknown. You know, it is still insurance. So that is a prudent amount to be kept in the insurance reserve, but it's an important one to bring to your attention that probably, you know, doesn't get much debate about because of the nature of the reason why we retain it. Again, on page 97 is the disclosure note then to the unusual reserves. And I think I've discussed and highlighted to you what these are kept for on page 97. And then further on page 99 is the item that I wanted to disclose to you in a bit more detail. This is the item which caused the accounts to be qualified in 2021, and this, if I can ask members to cast their minds back, is the situation that Ben so colourfully described when he talked to committee is it's thinking yourself, if you've got £20 and if you've got either £15 in one pocket and £5 in the other, or if you've got £10 in one pocket and £10 in the other, doesn't really matter, but you've still got £20 either way. So this was the quandary that we had in respect to the revaluation reserve and the capital adjustment account. In totality, they were correct, but we didn't know what the balance was between the two, and this was the uncertainty that led to auditors providing a qualified opinion last year. Just to give some background of what it means, what it relates to. The revaluation reserve relates to in a rolling program, we're required to have our assets revalued professionally on a revaluation basis, and in this report at note 14, we highlight on the bases on which we value all our different assets. So we're required to have them valued at different points in time, and the movements in those revaluations are required to be washed through the accounts and ultimately into the revaluation reserve. And if they've increased in value, they go into one or the other, or they decreased in value, they operate at an equal entry. But what we hadn't done previously in respect of our assets was disaggregate those movements in asset values between land and buildings. We treated it as one asset, and we attributed the movement in value as a whole. Our auditors expected us to attribute the movements in value to land and buildings separately. And so the whole process, which has led to the accounts being late this year and why it's taken so long to enact this remedial action, is that we've had to disentangle all those transactions going back to 2010, disaggregating land and buildings transactions throughout that period, and disaggregate those transactions to their satisfaction. So we have done that to their satisfaction in relation to those sample of 16 assets that they've identified, and that restatement equates to 160 million that you can see on that page there, on page 99, halfway through. So you can see that it's been referred to as a housekeeping exercise, and ostensibly it was, but it was a truly onerous and very time-consuming exercise, noting that it's on a line-by-line basis, year-by-year, asset-by-asset process. We don't want to be in this position again, and in the agreement with our external auditors and the Section 151 officer, we've undertaken a procurement exercise to secure a piece of software, piece of CIPFA compliant software to manage assets, fixed asset accounting and revaluation going forward, with a view to having it active and live for the closure of 22-23 accounts going forward. So hopefully, it'll make the whole process, which is currently quite onerous and time consuming, a lot more efficient and timely going forward. We can move to page 102. Again, another large item that sits on the balance sheet. It's the pensions reserve and the outstanding long-term liabilities in respect of the pension fund. As you can see there, it's stated liabilities at year end of £714 million. what does that mean? You know, the eventuality of that liability crystallizing all on one day and being called in all on one day is highly unlikely because of what I'm about to tell you, because that is present day value of all the future pension promises that receipt of the pension now, our current former employees who are in receipt of their pensions, but also people who are still working or are yet to retire and about to receive their pension. Those are all their present day value of their pension promises. And that's the value there crystallized on the balance sheet. However, there are assets sitting within the pension fund which are allocated to Swansea as an employer, which are projected to be equal and opposite to that. But at the point of writing, at this balance sheet date, they are not. And so this is the deficit on that mismatch between the liabilities and those defined benefit pension promises going forward. Obviously, this is historical. This is 21-22, and you know, I could bring you right up to date and bring you some good news about that liability and what that figure will look like going forward. It won't change materially for 2022-23 because this is based on the 2019 valuation figures, which are rolled forward. However, Pension Fund Committee will meet next week, and they've already received the draft of the actuarial valuation report, and I think the leader of the council referred to it in his budget presentation last week. For the first time ever, the pension fund will report 100% funding levels at the 2022 valuation next week, and Councillor Mike Lewis across the floor from me there, who chairs the Pension Fund Committee, will hopefully chair the meeting, and Councillor Locke there opposite me will approve the recommendation and approve the actuarial valuation, which identifies 100% funding for the first time ever. So hopefully in 23-24, when you receive this report, all things being equal, that will be a zero in terms of liabilities outstanding in respect to the pension, or nearest damn it, noting timing differences. And this is all based on the date that the IAS 19 is undertaken and the volatility and discount rate used to discount those future liabilities. So it's all subject to the vagaries of the discounting, but that is a very positive and pleasing thing that we can report in respect to the pension reserve. But as far as 21-22 is concerned, we were reporting at that time a pension deficit of that amount. And for historical reasons, I've been led to believe members are always interested in the remuneration disclosure for senior officers, and that's on page 112. And as you can see, the numbers of officers breaching the band required for disclosure now is rising. You know, we've had a couple of pay awards, people going through increments. So sensibly, we're going to get more numbers in there. And also, importantly, there was an observation by Audit Wales of how we were, who we were including in terms of officers breaching that band. We weren't prorating and rounding, grossing up part-time employees. So they wanted us to do that, and that brought some additional officers into the mix to be disclosed in respect of that.
Can I stop you there? I think Councillor Mike White has got a question.
Sorry.
If I could just declare that I'm a benefactor of the council's pension fund, personal interest.
Okay.
Thank you.
Okay, thank you, Mike.
Thank you, Chair. Again, on page 124, this will be a note of interest to you. Agency services. This is particularly relevant, as you can see down there, front and centre, COVID-19, all those grants that we acted as agent for in respect of dispersing to the community and businesses at large. My colleagues in the revenues and ben section were front and centre in 21-22, devising schemes and advising Welsh Government in some instances in formulating the criteria to disperse those grants and aids. And 31 and sorry, note 31 on pages 124 and 125 indicate those figures. And as you can see, at the height of the pandemic in 2021, it's like totaled 129 million. Understandably, you know, it's less than half now this year, as obviously we move out of the pandemic and you know, we didn't have to make those payments to businesses, etc., and furlough. Then, if you could bear with, well, we move to the HRA. As I say, we're legally obliged to report and maintain a separate ring-fenced account in respect to the HRA. And as you can see on page 149, you know, ostensibly, all the costs are in relation to running landlord services in respect of our housing stock and repairing and maintaining those. And as you can see there at the top line of those figures, a pleasing uplift in activity in repairs and maintenance from the 2021 figures. Obviously, you know, we were still in pandemic mode. There was restricted access to people's homes. People were understandably shielding and perhaps not wanting workmen in the home for repairs and maintenance, and so that activity was curtailed. 21-22, we can see an uptick in that activity there. And then I previously reported the capital expenditure in respect of the HRA, and pleasingly, for the first time in a generation, you know, the building of new council homes. I think, Chair, to leave an appropriate time for questions, and I'm bracing myself for these technical questions that your professional lay members have got for me, but to leave enough time and to do them justice, I'll leave it there, Chair, if it's okay with you.
Thank you, Jeff. It's very difficult to go through an accounting process with the technical ability that you have. It's made for lay people then. So it's very difficult to understand, but I'm sure most of us got the gist of what you were saying, and we have to take assurance that Audit Wales have gone through these accounts with a fine-tooth comb and have issued an unqualified opinion. So I think we have to keep that in mind as well with the level of questions that we will pose to Jeff. But it's right and proper for us to make a number of questions if we feel that's fit. So any questions around the table in the room first? No, if I can go to online, is there anyone? If I can have a show of hand, if you have, please. I've got two hands up, and I'll take Councillor Leslie Watton first, please.
Thanks, Chair. It's not a question, it's a comment, really. I'm sure that the Jeff Ben's department must have had a real nightmare trying to undo the situation that Audit Wales brought forward last year. And so I'm really pleased that they've now been able to get some software that will help them avoid that problem in the past, in the future. I just wanted to say that and say thank you to all the work they must have done to try and untangle that mess, because it must have been a real mess. Thank you.
Thank you, Councillor Watton. That's very well said, and I support that also. I've got Councillor Jeff Jones next.
Yeah, thanks, Chair. Yeah, it is a minefield, and Jeff, you know, you've done some good work actually explaining some of the things. Actually, going back to page 36, you know, I'm just trying to get my mind around some of the figures there. Halfway down the page, we've got net cash flows from investing activities. It's gone from 60 million up to 202 million, which is a negative figure. Then further up, we've actually got 1.45 billion, the previous year up to 1.556 billion. I can't, the investments, why are they a negative figure with regards to a net cash flow? And with regards to, we've spoken about the pension fund. Are we talking about investing activities? Is that investment activity separate on this page to what the pension fund actually invests?
Jeff, do you want to respond to that?
Thank you, Councillor Jones. If I take your last question first, yes, I can assure you that this statement purely refers to and relates to the general fund. The pension fund's investment activities are disclosed in a completely separate set of financial statements, and they're approved by the pension fund committee. I can happily send you a copy of those if you're interested, Councillor Jones. In terms of the cash flow statement, as I perhaps I didn't communicate it well enough. This is a cash flow statement. It's not a balance sheet as such. It doesn't reflect the actual investments or liabilities as such in that regard. It's an illustration, as you can see, of the movement of cash during the period, the ins and outs. So to your point about how does it reference the investments and borrowings that you can see on the balance sheet, it doesn't directly. It shows how they've come into the authority and then subsequently gone back out again as investments, and also incorporates other cash flows of the authority, as cash. So what it tries to do is tries to disaggregate and remove this concept of accruals. All these accounts are based on an accruals basis, whereas a cash flow statement is purely interested in, during the year, a movement of cash. And that is what that statement is trying to communicate to the reader. And Councillor Jones, if I'm brutally honest with you, my colleagues do find this statement the hardest to compile and reconcile at financial statements year end. It is always the one that causes the most problems to balance and produce a statement which reconciles. But that's what that statement is trying to communicate to you.
Okay, thanks. And actually looking forward, with the introduction of Oracle, will it make it easier to actually compile this with that system actually in place?
We've currently got Oracle, Councillor Jones. It's merely an upgrade. Some would suggest that we're moving to. So it's the same but different, and I think the challenges will still be there in compiling them, because I hope it was apparent in the training this morning. We are atypical. The Oracle system out of the box is built and designed for a corporate finance function, a business function, not a local authority finance function, with all our idiosyncrasies and peculiarities that I pointed out to you in our training this morning. So there are some adaptations to that system which need to be made to the system. Hence, the complexities in implementing a new system, and also sort of partly contributed to the fact of the revaluation reserve and capital adjustment account historical imbalance, because of the lack of ability of Oracle to handle those sorts of transactions. We had to do it manually, and that's how that error arose over time.
Okay, thanks.
Thank you, Jeff. Phil Sharman.
Thank you, Chair. Jeff, I'd like to echo Leslie's point and say that the work you've done to prepare a set of accounts which are free of material misstatements and resolve the historic qualification is certainly to be commended. And I do appreciate the efforts, as Leslie's mentioned, must have gone in to achieve that. Personally, I would prefer a set of accounts to be of good quality for the auditor, even if it's a delay, rather than try and rush a set of accounts out to meet the timetable, which perhaps has been set arbitrarily. So sure, there's been a delay for good reason, and the effort put in to resolve that, I think, is effort well spent. Okay. Thanks also for your presentation. I think that has answered a number of specific questions. What I'll do is perhaps just rest on one or two items which I think would be helpful in terms of a general understanding. In particular, comparing a year on year, and I'll start with the income statement on page 24, and I'm hoping that you can help me with a couple of items there, Jeff, please.
Yeah.
If you look at the line halfway down there, which is called net cost of services, this represents essentially the service cost of those big spending heads of finance, social services, education. You can see them in a line, and the sum there at the bottom, which is the total of the net cost of services, shows expenditure in the prior year at 385 million. And then going across to the current year, going to 477 million. So that's an increase year on year, Jeff, of 24% in net cost of services. So is that in line with budget expectations? And is there anything for us to be worried about here as a governance and audit committee in terms of the increase in costs from year on year?
That increase year on year, well, this is my professional opinion on why there is that material difference at that stage. To provide governance and audit committee about the assurance about the year on year movements on budget and report against reported budget, those are reported separately, quarterly budget monitoring and budget outturn. So I can give you assurance that budget expectations were met, if not exceeded, as reported in this financial statement. I would suspect that the difference year on year in respect of that is the addition of the ancillary costs additions and omissions that I referred to, whereby we have to add back in various additional items, and that's where the difference lies, not in the underlying spend. However, to give you a complete answer, Mr. Sharman, can I endeavour to give you a written answer, because I can see I'm not convincing myself here.
Yeah, I'd be happy with that. Thank you. I realise that this is an accounting basis rather than, if you like, the management budgeting basis, but nonetheless, just taking that line alone, I think is quite interesting. And perhaps, Jeff, I could just go along and highlight a related note, because that page there gives an analysis by service area, but there's a related note on page 70.
Phil, before you leave that, Gillian's hand is up. Is that in relation to the query Phil has just raised, Gillian?
Yes, if I may, I could probably have a go at explaining the difference. I think if that would be helpful.
Yes, please.
The CIES that you've reference the movements. As Jeff has already pointed out earlier, there are some adjustments in there in terms of revaluations, pension fund things. So they're in there. So if you look at the expenditure and funding analysis on page 23, that'll tie back more closely to budgeting figures, and you'll see there's the net expenditure chargeable to the general fund, and then a list of adjustments, which then reconciles back then to the figures in the comprehensive income and expenditure. And if you're looking at real sort of movements in actual expenditure, you should really look at the net cost of services in the first columns there, which will show you what, about a 20 million adjustment or difference between the years. And the adjustment you see in the CIES is really these other adjustments, which are explained more fully in note 6. So they're more, as Jeff I think said, funny money types of things.
That's
Thanks,
helpful.
Julian. It's good.
Thanks, Julian.
So Jeff, just going back then to the related note on page 70, which shows expenditure analysed rather than by service but by nature. And if I look at that, I can see, for example, employee expenses. Well, if you look at total expenditure from 900 million, this is gross, to in the prior year 933 million, going up to 1.036 billion in the current year 21-22. If you look at employee expenses alone, up from 387 to 428, that is a 10.5% increase year on year. And I wonder if you can just explain that in the context of, well, I guess there'll be three things there. There'll be pay awards, there'll be incremental progression, and there'll also be changes in headcount. Just to understand, you know, how employee costs are increasing year on year, that'd be good. Thank you.
That note, as you say, reflects the increase in employee costs, and I think it includes as well, quite a major element of, again, funny money. It's the pensions actuaries adjustment of about, I think in my notes here, I've got about 28 million of that is accounted for in the pension funds actuary adjustment for past service deficit, the ISA 19. There's an increase in non-teachers pay of about 11 million and an increase in teachers pay of about 6 million. And then other changes, which then bring it back down, technical adjustments then of about 4.8 million, which give us the 41 million pound difference. The pay differences there have arisen mainly because of two reasons. There was about a 1.75% pay award during the year, and also I understand from payroll services there was an increase in the headcount of about 400 additional staff. I can't say whether they're full-time or part-time, but just purely headcount is about 460 increased year on year.
Jeff, thank you. Perhaps I could move on from income and expenditure just to highlight a couple of items on the balance sheet.
Could I butt in before you do,
Yeah.
Phil? Do you mind? Jeff, do you think that was as a result of the track and trace that was put in place? Because there is a corresponding increase in income for that year.
Could well be, Julie, because as you see in the narrative at the beginning, it does reference the establishment of the track and trace service. I don't think they really account for the whole 460 additional headcount, but yeah, a material amount of them would be.
Thank you, Julie. Phil, do you want to carry on?
Yes, thank you, Chair. Just got a couple of things remaining now. I'll have a look at the reserves. I'll also have a look at the balance sheet. On the reserve statement, let's start there, page 31. Jeff, thanks for going over that. I know that I think Chair said Councillor Mike White has an interest in reserves and how they're used, and really I'm focusing on what's known as the usable reserves. And I can see that the total usable reserves at the year end stand at 227 million. And I think that's a figure we should bear in mind when we come to receive the related paper from Audit Wales, because Audit Wales have taken a look at the level of reserves held by the authority and how that compares with other bodies. But just drilling down a little bit further then, I can see on the earmarked general fund reserves, there's a 42 million pound increase. And there's a further note that you've highlighted, Jeff, which explains which particular reserves that's gone to. And I think amongst that is a recovery fund, I think, which was set up last year. I say last year, I mean 2021, with a 19 million pound or 20 million pound contribution, and then a further 19 million pound going into it this year net. So there's now, or there was at the end of that year, 21-22, a total of 39 million in the recovery funds. And Jeff, I'm sure you mentioned this in your presentation, but the decision to place, if you like, those available funds into the specific reserves is a policy decision made by the executive, by cabinet. Is that correct?
Correct. Upon the advice of Section 151, that it would be prudent to do so.
Okay, that's good. Be interested to hear from.
Can I interrupt a minute, Councillor
Yes.
Mike White?
Yes, could I just bring to Mr. Sharman's attention, I didn't declare an interest in the council's reserves. I declared a personal interest because I'm a member of the council's pension fund. So just to put the record straight, please.
Thank you.
Thank you.
Okay.
Understood. Okay, that's good. So yeah, I mean, the reserves look in a healthy position, and we'll be hearing a little bit more from Audit Wales on that in due course. On the balance sheet then, Jeff, very helpful to explain the way in which we've got movements between short-term investments and long-term borrowing to finance the capital expenditure. And I can see also some fairly big changes in the whole capital position of the authority. On note 14, I think is the PPE movements. Jeff, it'd be really helpful, I think, if you could just highlight that line where there's capital additions and also adjustments and revaluation, and just talk us through one or two items on that, if you could, please. That would be very helpful. Noting that there's been some pretty major expenditure occurring in the year 21-22. I think that's worth just highlighting, please.
Thanks, Mr. Sharman. There is, and I think I referenced it on page 14. Where we identify capital spending. You can see in real terms really what the capital additions are at the bottom of that page, in real terms, the actual physical assets that we're referring to and creating. But if you bear with me, Mr. Sharman, while
so on page 77, sorry, 77, I'm seeing total capital additions of 138 million, which is big. 36 million on council dwellings, 41 million on other land and buildings, and then 17 million on infrastructure assets, and in addition another 29 million in terms of assets under construction. So some big programs of capital expenditure going ahead in the year, which I just want to highlight. But Jeff, in addition to that, we've got revaluation increases and decreases. Increases of 101 million and decreases of 39 million. So some big numbers in terms of the overall property, plant and equipment of the authority.
Yeah, so I could just. I think that difference totals about £221 million for year on year.
Yep.
So basically, additions which you've highlighted, and I've only got them in you know, as an accountant almost. I'm as I say, you know, for illustrative purposes in the narrative part of the report that, you know, we identify some of those assets, but for accounting purposes in numbers, I can give you the values of some of those additions. Council dwellings, 8.6 million, OLB, 108.5 million, vehicles, plant, furniture and equipment, 11 million, infrastructure, which is roads, pathways, bridges, etc., 23 million, community assets, 3.4 million, and surplus assets, 5.47 million. So, and the other balancing figure, that totals about 160 million. And the other balancing figure is a mixture of disposals, depreciations and revaluations. These revaluations that I referred to earlier on, whereby the assets in question are subject to the valuation cycle and they've been revalued, in this case, upwards.
Very good.
Chair,
I'm nearly done. There's just a couple of things which I want to mention before we close on this item. First of all, Jeff, you mentioned the pension deficit. So this is the extent to which the obligations of the local government scheme are not funded. Normally, you'd expect the assets of the scheme to balance with the liabilities into the future. And currently that gap is well, certainly in those accounts was 714 million. I do understand that is a reduction in the gap as was seen for the previous year, which I think was higher. So, you know, we're in the right direction. And you mentioned in your introduction there that there'll be an improvement further following the actuarial review. So we're seeing a trend there, which is in the right direction. As members, I think we would be concerned if it was going the other way, and that's something I think we should need to look out for. So can you just explain what steps the authority is taking to get the pension fund, if you like, in a situation where it's balanced between its assets and its liabilities?
Can I just intervene there? There is a pension fund committee that trawl over this quite closely, Phil. So I wouldn't want to have to repeat anything that's gone on. I mean,
sounds good.
Councillor Mike Lewis is involved in that, and I'm sure we can look to that meeting to apply that rigor, if that's okay. It's right for you to ask that question, but in response, I think I would be keen to mirror and reflect on what's gone on through that rigorous pension committee, if that's okay.
Yeah, I'm happy with that. So just to close in that case, Chair, looking to the next steps, following the scrutiny of this committee, the review of this committee, in accordance with the terms of reference, we're asked to highlight anything that council might want to consider prior to their approval of the accounts, and also highlight anything which is appearing in the auditor's report. And I think as a conclusion of our work today, we can say that the auditors are proposing an unqualified report, and that is a positive sign. We can mention that the deadline for the statutory reporting of the accounts or the draft accounts was not met, but there's good reasons behind that. And we can also say that we've given the accounts a good level of scrutiny and received a report from the finance director or the representative in taking members through the accounts today. Jeff, could you just highlight for us then the next steps and the way in which this will then go through to the Committee of Council and the final completion of the signing of the accounts by the 31st of March?
Thank you, Phil. I think you summed up the responsibilities of this committee very well, so I wouldn't want to repeat that. I mean, to my understanding, the reports will be signed off with an unqualified opinion by Audit Wales and the full council the end of March. I'm not anticipating, I'm not being informed of any hiccups to that. I think Gillian has indicated that will happen. Jeff has indicated there may be a couple of adjustments that need to be made. One he identified straight away with the council tax, is the howler, I suppose. But I'm sure everything will run as according to plan between now and the end of the month. I understand it will go to full council for approval, and it'll be signed off with the approval of full council, unless I'm told any different. Is that right, Deb?
I think it's signed by the presiding member of the council and Ben as Director of Finance.
Okay, thank you very much then. If there are no more questions for Jeff, I'm sure you hope there aren't any more. I thought you did very well in answering those questions and presenting that set of accounts, Jeff, and I do appreciate you standing in for Ben. It's not an easy task what you were asked to do today, but I think you did it very, very well. So
thank you very much, Chair. Pleasure.
Thank you for that. If members will allow, our audit colleagues from Audit Wales have asked if we can take agenda item 12 and 13 next, which are related to the work that we've just been discussing. That seemed pretty sensible to me, so I hope there are no objections to that from members. If there are not any objections, then can I invite, I'm not seeing any, can I invite Gillian then to present paper item number 12 on the assurance and risk assessment and your audit work programme and timetable, Gillian.
Thank you, Chair. Yeah, I'll just take you through item 12 and then my colleague Norm Jenkins will take you through 13.
Okay.
So item 12, agenda item 12 on page 152 is our financial position update. This work was completed as part of our 21-22 assurance and risk assessment project. It just gives an update on the council's financial position for 21-22, but it is a point in time assessment of when we did the work, which was between September and November 22, and things may have moved on a little since then. I won't go through this in any detail. I'll just run through our main findings for you. So overall, we found that the council's financial position had improved in recent years through additional Welsh Government funding and increased reserves, but there's still a need to develop a sustainable plan to address the emerging cost pressures. The financial strategy or medium-term financial plan is updated annually, and the projected funding gaps over the medium term were broadly in line with the previous year's forecast. Usable reserves doubled over the two financial years from 2019-20 to 21-22, from 93.75 million to 186.7 million. We've previously reported that the council's track record on achieving planned savings haven't been that great, but the 21-22 budgets include planned savings of 8.3 million, but achievement against those wasn't monitored in any detail because of the COVID pandemic. And then the 21-22 outturn reported net revenue and underspend of 41.2 million as a result of service underspend and additional funding streams. So those are just the main highlights from there. If anyone's got any questions, I'd be happy to take them.
Any questions for Gillian on that paper? Phil Sharman?
Thank you, Chair. Just a short one on this. So does Audit Wales have a view on the reasonableness of the level of reserves as compared to other authorities? I mean, does Swansea look healthy? Does it look perhaps, you know, too much? Should some of those reserves be used to help ease perhaps the if there's too much, should some of those reserves be used to help ease some of the current cost pressures? That's the first question. The second one is about the level of schools, the the level of the reserve held in respect of schools' delegated budgets, which I know is ring fence for them. But that's up to 28 million at the end of this financial period, compared with just 8 million at the end of the prior year. So increase in delegated schools budgets reserves up to by 20 million just in that 1 year. So notwithstanding, you know, the work you've done, what conclusions can we draw as an audit committee on the level of reserves in relative terms? That would be helpful.
Thank you, Mr. Sharma. Earlier in the year, we did do a comparative piece of work comparing the council's reserves with the other councils based on 2021 data. And I think it showed the council was 6th in Wales. But once we've completed this work, so we're still waiting for everyone's accounts to be finalised, we will be pulling together another comparative piece, which will give you the information to see where the council sits in comparison to the rest of the councils in Wales. So that will be forthcoming. I would imagine Swansea's reserves are fairly healthy compared to others, and there has been quite a lot of funding over the COVID pandemic for most councils in Wales. Obviously, what the council chooses to do with its reserves is a policy decision, and same with schools' delegated budgets. Quite a bit of money has gone into that, and again, that's a policy decision of how you use those reserves.
Thank you, Gillian. If there are no more questions on that, then can we move on to the next agenda item, which is agenda item 13. Is this you, Non?
Hello.
Hi.
Yeah, I'm happy to do this, although it does feedback. Is that better? Yeah, sorry, it's just okay. Acoustics. Yes, I'll take you through, but as you can see, we give you and send through quarterly updates to councils, which governance and audit committees are very open to wanting to put them on their agendas. Happy to take you through. It's in the same format as usual. And it starts with obviously a summary of the work in terms of the financial account work that Gillian has just taken you through now. So if there's any issues or comments on those, please feel free to ask Gillian, but I'll take you through to the performance audit work. So for the 21-22 performance work, which is on page 161, we've completed the improvement reporting audit, and we've completed part of the assurance and risk assessment work you will see there. What we tried to do is put the links to those, to the things that we have published already in this for you. So you'll see that we've already published the progress update letter summarising the implications of the Local Government Elections Act and the self-assessment arrangements, which we brought to committee previously. And also we've published the carbon reduction plan summary, which we've also, well, that came last time, but then was deferred. So it's come to you. You will also have, obviously this is drafted before you had the financial position, but that financial position report now has been published, and as Gillian has just taken you through it, and we're still continuing to draft the recovery planning work as part of the transformation report pardon me, that is being drafted. Springing forward work on assets and workforce is being drafted, as I said, the local risk work in terms of transformation and achieving better together. So going on to 22-23 performance work, where the assurance and risk assessment work is an ongoing piece of work throughout every year anyway. What you see there, the key points that we are looking a bit more in depth on across each council. So this is across the 22. So we're, as Gillian said, we'll be looking at financial position work going forward, as you might expect, and also capital programme management. That's yet to begin. and it's being scoped currently. The use of performance information with a focus on service user perspective and feedback from that. The project brief for that has gone out, and we're starting on that now, and thanks to the officers for sending through the necessary documents and arranging the necessary meetings and interviews for that. And also we're doing the setting of wellbeing objectives with you too at this point in time, so that's all set up and ready to go. And any other local areas of focus that we might look at throughout this year, we've drawn in as part of this, because we know that you're working a lot at the moment on refreshing quite a lot of the corporate arrangements, such as risk management, such as performance management. So we're keeping an eye in terms of watching brief on those refreshes, including your self-assessment and everything else that you're refreshing. And thanks to Ness for keeping us in the loop on all of that work that you're working on. So working alongside in that sense, and giving us assurance, but also hoping that we are adding value to that work too. In terms of the thematic review and schedule care, so that's on page 165. The thematic review, as you know, we have done this with our health colleagues across local government and health across Wales. They're coming to an end of their field work at the moment. They're at case study or case file review, so they're coming to an end, and obviously we'll be reporting in due course. And we have sent out the project brief, so an update on that. We're not just scoping it, we have now scoped it, and we have sent out the project brief for the digital and setting that up. We're mindful, obviously, of pressures on councils at the moment, and so we're in close contact with Richard and the team, as well as other councils, to timetable these in between now and September for when is most convenient and suitable for you. I think we're doing the digital work after May or after March, around about May time. So that's it for me in terms of the local performance work. And obviously what you have then from page 166 onwards is the summary of all our local government and national studies that we have planned or in progress or have been published by the end of December. There will be some that might have been published since, and they will come through to the committee, but also they'll be included in the Q4 update for you. Any questions? Happy to take.
Thank you, Non. Have we got any questions for Non on this paper? Not seeing any hands in the room or on screen. Just one query for me, I don't know whether you'll be able to answer it, Non, is the regulators that are in the schedules towards the back of your report, Estin, CIW, etc. If we wanted to see any of those reports, how could we access them?
Sorry. Hi. Feedback again. Is that better?
Yeah.
They're all. I'm getting really bad feedback.
Mm.
Right. Is that better? That's better. I'm not getting any feedback now. The Estin report should be published. I know you had your inspection last year. That's available publicly, and CIW will be sending the councils any output from theirs. I'm not sure whether they published anything this year, but they will send them through to the Director of Social Services, as will Estin send them through to Director of Education. So they're available. So I'd suggest speaking to the directors if you haven't seen them yet. So the Estin one's on their website.
Thank you, Non. There is one particular of interest to me, which is the deprivation of liberty safeguards. So I'll speak to the officers involved with that to try and get that one. Okay, there's been no more questions for Non then. Thank you both from Audit Wales for attending this afternoon and presenting your reports, and also thank you for working with the officers of this council in harmony to get the work done and completed and hopefully all signed off by the end of March. If you wish to leave the meeting, you're more than happy to do so.
Thank you. And thank you for bringing forward items.
Okay, no problem. Thank you. Okay, if we can go back, please, to agenda item 6, and can I thank everybody in the meeting, the members today, for bearing with us for those lengthy, difficult items before and the early part of the meeting, but it's very important that we give them due justice. And if I can move now to Simon, it's nice to see you, Simon, on this occasion, rather than on a screen. So if I could ask you to take us through your internal audit plan methodology report, please.
Yes, thanks, Chair. Good afternoon, everybody. Before I do, I just want to highlight something on EST and inspections, if I can. I did speak to the Education Department this morning. Our routine school inspections restarted in September, so those reports will be available online in due course. And obviously the council-wide inspection report is available online as of now. So just a bit of an update on that one. So if I could take you back to the agenda pack on page 35 onwards. Agenda items 6 and 7 are combined, really. The first report talks members through how we go about putting the annual plan together for the internal audit team. So it talks about the consultation exercise that we undertake with all heads of service on an annual basis, how we risk score every audit on the audit universe, which dictates how frequently we undertake those reviews, which are either from an annual basis or a 5-yearly basis based on that risk assessment. The consultation exercise, as I said, took place in October, November, December with all heads of service, whereby we send out lists to all heads of service of all audits we have for those areas, asking them for any updates, any horizon scanning, any new risks that are arising within those departments for us to consider adding to the universe and adding to the plan for the next financial year. As part of the preparation, I also review the corporate and direct risk registers with the Section 151 officer, and also undertake an assurance mapping exercise, which is one of the appendices to the report. Just to outline, the resources available for the team for next financial year are the same as the current year, so it's 9.1 full-time equivalents. So the draft report, as in the next agenda item, Appendix 7, was presented to the corporate management team in February for consultation. If I take you on to agenda item 7, actually, because that is basically the draft plan. Bear with me a second. So members are asked to review the current draft plan in the appendix to agenda item 7, suggest any amendments, any additions, anything that you'd like us to consider to add in to that plan. Members are obviously aware we've had significant vacancies and sickness throughout the current year. So the plan as it stands includes any audits that haven't been started in the current financial year, which have been deferred to 23-24, sorry. And I've also highlighted in the plan in grey any possible reviews that we're ordinarily due next year that could be deferred to accommodate any further work that's ongoing in the current year's plan. So this is a work in progress. This is a framework of the work we've got planned for the next financial year. And again, it's obviously subject to consultation with yourselves and any suggestions from today's meeting, which I can take forward. The final version of the plan, following any further amendments, is due to come back to committee in April for ultimate approval for the work plan for 23-24. So I'm conscious of the time, Chair, so I'm happy to take any questions on the content of either of the reports.
I do have a number of questions on both of these papers. I'm prepared to give the committee a flavour of some of those queries I want to raise with Simon regarding the methodology of the population of the assurance framework in Appendix 4, I think, of the first paper, and also with regards to the some of the items within the plan. What I've spoken to Simon about earlier before the meeting started is I'll make reference to those areas where I'd like Simon to take away, to consider, and then to bring back in the April iteration of his report, because there are a number of queries I have that would change what the current plan is looking like, but I think the changes would come for the better in giving assurance around the effectiveness of operations within the council, rather than just purely compliance with the council's policies. So coming away from a compliance check audit, which is just ticking and checking that people are doing what they should be doing at the time they should be doing it, to something about whether it's effective in its process. So a slightly different approach, but one I think will enrich and add value to the organisation and to the council, and also add value to the officers who are leading these services to give a greater depth of assurance. And for example, if you can bear with me, just for Simon to consider these areas, and I'm happy to meet with Simon outside of the meeting just to explain in more detail. So if members will sort of bear with me. In the assurance framework, which is in the first paper, Appendix 4, where you see the management assurance column, that management assurance column is populated by the managers of those services carrying those risks. And what I've asked Simon to do when he's doing his assurance reviews is to assure himself that what is said in those columns by way of what management are doing to instigate control in those areas is actually working. Is it effective? Rather than place absolute reliance on what is said in that column. And I think that would be a really good piece of work to do, because that may bring about some opportunities for efficiencies as well. If I can cite one example, and that's the safeguarding. With regards to the narrative that's placed there, it was silent on how the deprivation of liberty safeguarding and the best interest assessors are performing with regards to the local authorities' role. It's an area that's been of a huge challenge for many, many years, and which is why I was interested in the CIW report that's due to come out to see how much exposure to risk the local authority has. So that's just an example, and there are other examples like the impact of poverty. The management assurance column is talking about the roles of the local area coordinators, the welfare benefits, advice access, and I think it would be good to see Simon undertaking a piece of review to see other services that the council is saying that they put in place and investing in are working as they were meant to work, rather than are the staff turning up every day, if you follow. So again, it talks about adequacy and effectiveness in those areas. If I can just carry on a minute, Councillor White, and then coming to the plan itself, you'll notice that there are a number of days where there are just 5 audit days allocated to do a piece of work. And I just wonder, could those audits of 5 days be reconsidered, and maybe the numbers of days looked at to put in an area that would give a greater level of assurance? Because with all due respect, when you only have 5 days to do a piece of work, by the time you meet with people, you do some sort of initial audit field work, you're only left with a very small amount of time to actually do the testing. So I think, you know, there would be a much richer piece of work to be done if you could look at those 5-day audits. And similarly, in the finance section of the plan, there are huge numbers of days for what is deemed as the fundamental audits, and recognising it's always a very good positive outcome from all of those audits, with a minor exception of 1 or 2 areas. I'm just wondering, is there opportunity to reduce the level of testing in some of those finance systems for that richness of doing more work in areas of perhaps greater risk? So, as I say, if you can just have a look, I'm happy to meet with you outside of the meeting. And then maybe once you've had opportunity to review it, I'm aware that it now goes to CMT as well. So I'm really pleased that and I think it goes to the Cabinet as well, have an opportunity to look at this, and I've liaised with Ness, and I'm aware of the discussions and the debate that goes on, because the resource you have is very, very restricted, it's rich, and it would be enriching for you to do some modernising pieces of work for the council. So that's my sort of take, but I will take any comments or any questions from members.
Can I come back on some of those comments, Chair? Okay, I take on board your first point about the Shearers map completely. That would be a useful piece of work. Just to outline how that column, the management of Shearers column, is populated. Members will be familiar with some duplication there with the risk register, because a lot of those entries you'll see come into committee in Richard's risk reports, because a lot of those are the control measures that are duplicated in that document. So those are the control measures that have been put in by the risk owners. I take on board the Chair's request for effectiveness. That's perfectly fine. In terms of the 5-day audit, when you look at the plan, those are primarily the simpler and smaller reviews. So just for example, we've got tree services, concessionary bus fares, recovery of vehicles. Those are audits which are just ordinarily due on the working programme, on the rolling programme, sorry. So they are quite straightforward, which is why they are fairly small in days. But I do take on board, there might be more effective ways to use those 5 days across the work plan. So again, I'm happy to meet with the Chair outside of the meeting to discuss those. The fundamental audit points you raised, Chair, we have had that discussion as a team because we are retesting same areas every two years and not really uncovering any major issues in the majority of the fundamentals, which is a positive. So I agree, we've had initial discussions internally and how we can maybe use those days more effectively. And either making those a 3-yearly audits or looking around how we currently roll those out. So yeah, I'm happy to meet with you outside the meeting and to take this further for the next iteration that comes in April.
Thank you, Simon. I mean, the internal audit provision is a real rich management tool for managers and officers of this council to get the best of what they're able to do. So it's an important area, an important piece of work. Councillor Leslie Walter.
Yeah, thanks, Chair. I'm a bit wary about not doing some of the fundamental audits on the basis that we've had some fairly positive results, simply because I'm wondering if they've been positive because we're keeping on top of them. So I think we need to be very careful about looking at which ones could be not necessarily followed up and making use of that time for something else. I'm also aware that, as I understand it, there are still, the department is still struggling a bit staff-wise. So again, I'm putting a lot of trust in Simon and his experience that he's already put this plan together, and within reason I would go by what he's already timetabled, but maybe take into consideration some of the things that you've put forward, Chair. Thank you.
Just for the record, I've not asked Simon to make any changes to what he's put together. I've just asked him to consider whether some of the things I've raised need to be built into the plan in some shape or form, whether it's this year or next year.
Can I come back to some of the points Leslie's raised? In terms of the fundamentals, Leslie, I think you're right. I think the current standard we have with the fundamentals, because they are done primarily every 2 years, has kept them on their toes and has seen an improvement over the years. I would be reluctant to push the schedule back for those that we have some issues with, the ones that are either moderate or that myself and the team have seen a slight deterioration in performance over recent years, for example. A few have dropped from 2-yearly cycle to an annual cycle over the last few years. So I am aware that there are possibly some issues in those areas, nothing major because they would be substantial, but a slight deterioration based on historical trends. So I'd be reluctant to ease the gas on those essentially. But there are some in there I think we could possibly use our time a bit more effectively. But again, I'll discuss that with the Section 151 and the senior auditors of the team who complete them, because we have seen that we are repeating testing and finding the same things, which isn't really a big risk to the authority in terms of a wider scope. But yeah, I take on board your comments. Thanks, Leslie.
Julie Davis.
Thank you, Chair. I'd like to reinforce what you've been saying and perhaps ask Simon to consider using more of a risk-based approach to developing the audit plan and not necessarily rely on the rolling programme. And also during the pandemic, you've very usefully used the thematic reviews, and I'm wondering, there is one in the plan for primary schools, but I'm wondering whether you can adopt that approach much more to cover off the smaller services, and perhaps adopt also a control risk self-assessment basis so that individual service managers are attesting that they are complying with the basic requirements of contract procedure rules and accounting instructions. I think that's that methodology reinforces the requirements of the individual service managers. And it just two queries that I don't expect an answer to now, but perhaps you could look at. Page 100, digital strategy, is marked with an asterisk to say that you're supposed to be looking at it this year, but it's been deferred to next year. But you've also marked it as possible deferral to the following financial year. Given that Audit Wales are looking at digital in May, do you think it would be beneficial to have a look at that at the earliest opportunity? Because a digital strategy is going to be an enabler for much of the transformation that the council will look to do. And my second point is on page 92 for non-productive days. You've budgeted for sickness absence at exactly the same level as this current year. Is that a reasonable assumption to make, or are you erring on the side of caution and not overcommitting the audit team in terms of productive days? As I said, I don't expect an answer to those, but perhaps we can come back.
Simon, if you want to come back.
Yeah, I can come back briefly, Chair, if that's okay. Yeah. In terms of thematic reviews, Julie, we have rolled it out across a number of different departments. For example, we've got social care establishment audits, or thematic questionnaires. We've also got them in the branch libraries questionnaires. So we have sort of expanded that approach across a number of different areas. We will continue to look for others that can be implemented in, obviously, to streamline that process. Your questions on digital strategy, the rationale behind that is because that is so up in the air at the moment with the rollout of Oracle Fusion. We have got an Oracle Fusion audit due next year in Q2 in consultation with NES. So the digital strategy as it stands and the various changes that are in place for the next financial year, we did look at the possibility of deferring that to the further financial year, but obviously we'll review that when I come to put the final plan together. Yeah, that's in terms of the non-productive days, sorry, Julie, the sickness absence, that the holiday sickness and special leave has been increased this year, but you also see an increase in the contingency budget from 34 to 67 days. So there is also some contingency added into that balance. I haven't overestimated sickness for the next financial year, because I'm hoping we won't be in the position that we are this year, because we'd hopefully get a full complement back for the next financial year. I hope that gives some explanation, Julie, but obviously I'll take any further questions.
Thank you. Councillor White.
Yeah, just to clarify, Chair, you mentioned obviously within the rest of the party. I know that Paxton's committee, scrutiny, they're obviously looking in this area as well. And this well could obviously cross one of the CDCs as well. So is it perhaps that we obviously glean information what's been coming from them, which might assist Simon?
Yeah, I mean, you know, when other committees are considering papers and reports, I'm very keen, as you know, not to duplicate any of that work.
Exactly.
So, you know, if those arrangements are in place, I will take every opportunity not to revisit those, but to take reliance from the chairs of those groups and committees to give us assurance. Just to reinforce, I'm not asking you to change anything, but if you can consider the comments that have been made, and I'm happy to meet with you outside the meeting to expand on those rather than go through the minutiae at the meeting today.
That's fine, Chair. We'll pick it up outside the meeting.
Yeah.
Thanks.
But can I also thank you? I know the team's been under considerable pressure, and I know the amount of work that goes on in the background to produce that report. So thank you for bringing it today, and thank you for presenting in person as well.
Thank you, Chair.
If we can move on then, I'm just conscious of time, to the governance and assurance arrangements for Swansea's Council's strategic partnership. I'm not sure who's presenting this one. Richard, is it?
Yeah, that's right.
Okay, welcome Richard, if you can present.
Thank you, Chair. So the report starting on page 105 of your papers, it provides an overview of the governance arrangements for the strategic partnerships that the council is involved in. The partnerships covered in the report are set out in paragraph 1.2, and paragraph 1.3 describes the principles that are used to judge good governance within the partnerships, and that's in line with the council's corporate code of governance. And this report is structured around each of those principles. So paragraph 2 on the next page describes aspects of a number of the partnerships governance and assurance arrangements that have been modelled on and draw upon the arrangements that govern the council, and also employ the council's statutory officers and depend on other council arrangements such as scrutiny and standards committee. It also notes how all of the partnerships have published descriptions of their governance and assurance arrangements and develop policies and procedures to ensure that members of the partnerships behave with integrity and have a strong commitment to ethical values. In paragraph 3 on page 107, the report outlines how the partnerships ensure openness and how they engage with stakeholders, and there are some examples of that cited around various projects and the methods that have been employed, including around communications, marketing, and also the use of social media. And in addition to all that, all of the partnerships publish details relating to board meetings, including board work plans, agendas, minutes, and other supporting papers. In paragraph 4 on the next page, the report describes the production and publication of plans, which themselves describe objectives and desired outcomes, and how progress against those plans is monitored and reported through various annual reports. And in paragraph 5 on page 119, that sets out how these reports then and the other reports and assessments are used to identify what needs to be done to ensure that those objectives and outcomes are achieved. Paragraph 6 summarises how each partnership develops leadership and other participant capacity and capability, such as through induction, training, and other development opportunities, as well as the use of external resources where that makes sense. Paragraph 7 describes the ways in which the different partnerships manage their finances, their programs, their projects, their performance, and their risks. And then finally, in paragraph 8 on page 112, the report concludes with a description on how the partnerships work to ensure transparency, some of which was already touched on in the earlier parts of the report. Thank you, Chair.
Thank you, Richard. I found Appendix 1 very helpful with the information on a page of, the number of partnerships, the scrutiny arrangements, and the consultation plans. So thank you for that. That made it very clear for me. Are there any comments or questions on this? Not seeing any hands up in the room. Can I just raise one point on the South West Wales Corporate Joint Committee? Has got a subcommittee of Governance and Audit Committee. I've sat on one of those meetings to agree the terms of reference in November 22. Subsequent meetings have been cancelled, and I've not had any notification of when the next meeting is going to take place. But I have chased the officer that's responsible for arranging that. But I just thought it was appropriate to note that at this meeting, being as it's referenced to in this paper. But that's for information. If there are no other comments or questions on that, thank you, Richard, for presenting that. If we can move on to the next agenda item, which is agenda item 9, progress on the upgrade of Oracle. Sarah?
Thank you, Chair. Yes, just to give you a brief update. So the Oracle Fusion system is on track to go live in April 23. We then have a period of support post go live for about 6 weeks when the system is stabilising. And then we have an orderly close down to the end of June, at which point the project closes. And there's an audit starting then in July of the Oracle project, as Simon mentioned. So this is just to give you an interim update here in the report attached to your papers. As I said before, we are having good progress. We're on track. Key things to highlight: we've strengthened some of the governance in the project since October. So the interim director of corporate resources is chairing the board. Some of the business leads, the heads of service, have now joined the board, which is helpful. And we're having more regular meetings, especially going up to go live. So we're actually meeting weekly at the moment. We're in the payroll parallel run phase, which is the comparison between the two payrolls, existing and new. There's 3 payrolls: teachers, pensions, and the monthly payroll. All have a target of 99% quality threshold, and all 3 have met that already. And we're just finishing off some follow-on activities, but that has completed then by the target of the 3rd of March as well, which is an update from what's in the report. The table at 3.6 highlights the milestones, and you'll see a lot of blues which show completed, and then greens which are on track. And then there's 3 which are ambers, which are flagged below at 3.7. So 2 of those are relating to reporting, the reports that we're going to get out of Fusion. So the priority 1 report, so the ones that have to be ready for go live, and they are on track. Everybody's testing those, but it's just set at amber just because of the relative pressure on the finance team, obviously because of year end. But it is on track in terms of the testing for go live. So there's nobody anticipating we wouldn't have everything for go live. And then the second one is around the priority 2 and priority 3 reports, which are after go live. So they would be things that aren't needed immediately, things like year end reports and things like that, which would be needed for the following year. So they're all going to be done post go live, and they're just marked as amber because we haven't got those completed yet. But everything is on track, and happy to take questions, Chair. Thank you.
Thank you, Sarah. That's good news that everything is now on track for Oracle. Are there any questions or comments? I'm not seeing. Oh, Leader, welcome to the meeting.
Yeah, thanks. I've been here a while. So it's been really interesting listening. I just wanted to place on record my thanks to Sarah and the team for the work that they've done. As Sarah's outlined, significant progress has been made, and the confidence levels are now high in terms of where we are a few weeks out from go live. So just to come in and thank Sarah and the team for the work they've done. I think we are in a much more comfortable position now, not taking anything for granted, but much more comfortable position than we were a month or 2 ago. So just really good progress.
Thank you for that, and I would agree with you. It's quite commendable, really, the work's been done. I'm not seeing any more hands up. Again, this paper was for information, so hopefully, Sarah, everything will be complete in the due timescales. But thank you for attending this afternoon. If we can move quickly now on to the next agenda item, because I'm minded of time. Public participation strategy, and Hugh Evans is giving his presence to us today to present this.
Thank you, Chair. Little to add to the report, to give you some very brief background to it. The public participation strategy stems from the Local Government and Elections Wales Act 2021. It provides that each council must prepare and publish one. As part of that publishing and preparation, we had to, my mind goes blank, we had to carry out a public formal consultation period, which was carried out between October and November 2022. The responses from that consultation were considered when I compiled the final strategy. That final strategy was taken to Council and subsequently adopted by Council on the 2nd of February 2023. And as part of that adoption, I was asked at the next review stage, in about 2 years' time, to add specific reference into that report relating to the corporate development committees. Other than that, I've got nothing to add to the report other than perhaps to set out the purpose of it. There is nothing new in this strategy. All of this stuff is already in being in various documents throughout the council, but the legislation basically meant it all had to be brought together in one document to make it easier for the public. Nothing further to add.
Okay, thank you, Hugh, for that. There's one comment I want to make, and that's with regards to paragraph 2.8. I have discussed this with Hugh. There's an opening sentence which talks about the various committees make the council's regulatory decisions, and at the bullet point below that, at live B, it talks about the Governance and Audit Committee reviewing and scrutinising council affairs, which is narrowing its remit, but also as a committee we do not make decisions. So it's just clarifying that for the next iteration of the strategy.
Of course, Chair, I take your point and thank you for the heads up on that. I can see the paragraph 2.8 is slightly misleading, and at the review stage, I would suggest it reads something along the lines: the planning committee and licensing committees make the council's regulatory decisions, full stop. A brief description of each committee is outlined below, and then the bullet points remain. And I've taken away the link, the misleading link that governance and audit is a regulatory committee.
Thank you, that's perfect. No other comments on that? No, thank you, Hugh. And the next report is the transformation programme. Ness, welcome.
Thank you, Chair. So this report is on page 138 of your papers, and it is an information report providing an update to the committee on the progress we're making with regard to developing the corporate transformation plan and the governance arrangements that will surround it. So section 2 of the report sets out the background and refers to the Cabinet report last autumn, in which the Cabinet agreed the vision for transformation and the new governance arrangements, and those are set out in paragraph 2.2. In terms of the current position, that's set out in paragraph 3.1. You will see a table below there which identifies 13 individual projects programmes which are proposed for inclusion in the new corporate transformation plan. This is in draft at this point and was considered by the new Transformation Delivery Board, which was established back in November. That board considered this list actually on Monday this week, and further work is being done on that before it is discussed later this month with Cabinet and CMT. It is on track to go to Cabinet in April for approval, and at that point we will be seeking agreement of the plan and also ensuring that all those governance arrangements are in place. So for each programme within the plan, there will be formal governance arrangements in place to manage them. Most of those already have a governance board arrangement in place, and those which are new are just having those established. You'll see that the Workforce and Organisation Development Transformation Programme and the Digital Transformation Programme, both of which are new programmes, have now boards in place, and the terms of reference for those and the Transformation Delivery Board are appended to the report. So I think at this point I'm happy to take questions but the report is self-explanatory in terms of providing that update.
Thank you, Ness, for that. Are there any questions around the table? Any comments online? No. Positive to see clear terms of reference for each of those new areas of activity, Ness. The only query I had was whether the reporting from those committees at least 3 times a year to Cabinet and CMT, whether that's sufficient. Recognising the size of the agenda and the importance of transformation, whether it should be quarterly rather than 3 times a year. That's a judgment for you, though.
Thank you. If I can come back on that, Chair. So, Transformation Monitoring Board will meet quarterly, and that comprises of CMT and is chaired by the Cabinet Member for Service Transformation. And in terms of the updates to Cabinet CMT, that would be at least 3 times a year, but in practice is likely because there's also a formal Cabinet update annually. So that would be the 4th, if you like, discussion around transformation a year. So it will be quarterly.
That's perfect. Thank you, Nat. There are no more questions then on that paper. Thank you again. And if we move on now to the last 2 items on the agenda, I apologise for overrunning slightly. If we can take the tracker report first. If I can highlight on the minute reference 90 from February with regard to the readiness of the public sector for net zero carbon. I've recently become aware that the Deputy Leader, Andrea, has updated the scrutiny panel for climate change, that all audit recommendations have been actioned. This is a report that we deferred from the Governance and Audit Committee previously because I was aware it was going to that scrutiny panel and I didn't want to duplicate any work that was being done there. But I have been in touch with Andrea to see whether she could come back with just a brief assurance paper that what was discussed in that meeting we can take assurance from. And similarly, if I can move towards the complaints report, Scrutiny Performance Committee, which is from the January meeting, item 77. Scrutiny Performance Committee received an Ombudsman's report which stated that the Ombudsman would welcome feedback on the Governance and Audit Committee's review of the authority's ability to handle complaints effectively. The Ombudsman then will take this into account when they undertake their review. So I've asked Andrea, again, who's presented that paper, along with Sarah, who provides that complaints report to this committee, if in the next report that Sarah presents to us, that's made clear so that the Ombudsman can use that information to feed future work. So I just wanted to highlight those 2 particular ones. If there's anything else anyone has to raise on that tracker report, some is ongoing, but we've got dates when those actions will come back to us. But if there are any others I've missed that others want to raise, please raise your hand. Okay, and then the final paper is the audit work plan. Again, this is for information to enable us to have a quick check that we've received everything that we need to receive and we're on track to complete the work we need to do to comply with our terms of reference. So again, I've got no comments on this report. I'm looking around the room, I'm not seeing any hands up and I'm looking on screen. No. Okay then, that concludes the committee's work today. Apologies from me for overrunning slightly. But with the amount of discussion we've had, I thought it was well worth the time in running over that short few minutes. Thank you for your engagement, your challenge and your participation, and stay safe and see you next time.
Thanks. Goodbye.